confident do you feel of being able to break the logjam in infrastructure? And I ask you this in the context of what you're now supervising with IL&FS. A, how much worse is the problem than we understand it to be now that you've had a closer look at what's happening there? And how long will it take for us to put this behind us systemically?
Yeah. I think on IL&FS, let me first say that we've looked at the entire gamut of companies under that umbrella with a very wide array of businesses, and we've made some progress in terms of figuring out the nature of exposures of each of these companies. We've come out with this unique concept of green, amber and red companies to really define the status of each of these companies from a creditor exposure point of view. We have put a lot of the assets for a potential resolution or monetization, so most of those are out. So we do believe that in the next few months we should be in a position to start some of those monetizations. And having said,
will anything get done in this calendar year?
In this calendar year, I think we think a lot of it will get done in this calendar year.
Okay, so a lot of
fiscal calendar.
No, calendar. That's why I said calendar year. Yeah. So you believe that a lot of the asset monetization on the IL&FS side can go through in this calendar year. 22 companies have been classified as green. How many more of that long list, that plethora of companies and SPVs, do you believe that you think can be on the verge of turning around, and by when?
See, so far I think the analysis has been done by the resolution professionals as submitted to the board, which is about 69 companies, out of which 22 are green. But between these 69 companies, it accounts for 92% of the debt. There are still a few hundred odd companies domestically, which analysis is on, but it's only about 8% of the debt. All the foreign companies have been declassified out of moratorium from an Indian point of view. So we are getting a sense of declogging. So the balance 100 companies we will be able to identify in the next few weeks and classify them into green, amber, red. So we will have the full list of what we think are green, amber, red companies. The question then is, as resolution happens, the whole process of resolution is under section 241, 242, not the traditional IBC process, which is a whole new process which is being worked on by the government and IL&FS together, which is a unique Indian process for group resolution. So far in India, we've never dealt with a group resolution situation. We have dealt with individual companies. So this is a new path we are treading forward, and we think that we will at least be able to ensure greater transparency about the truth of what's happening at IL&FS, and we think a significant amount of it will get resolved and monetized in this calendar.
The role of the rating agencies, and this is something that the Parliamentary Committee on Finance is also looking at, the government and the regulator also in dialogue on this, especially in light of what has happened with IL&FS. What's your own take on the need for a review?
I think whenever you have a situation like this, we really got to look at the role of at least six categories: managements, boards, institutional shareholders, rating agencies, auditors, and of course the supervisors. So I think IL&FS will lead to a significant evaluation and introspection of the roles of each of these in the days ahead.
So need for an overhaul as far as regulations are concerned, especially when it comes to the role of rating agencies?
I think who is accountable for the raters and what is the basis and the rationale for the rating is something which will come under focus, because it is worrying for a system that a company is rated as AAA in August and is D in September. So we need to ask the tough questions on the basis and the rationale for the ratings.
But have you got the answers? I would imagine by now you've asked the tough questions. What is the answer?
I think, again, if you ask the raters, probably they may have been depending on the pedigree of the institutional shareholders on the basis of which they believe that should there be a need for capital, institutional shareholders will necessarily bring in the capital. Now, in the case of IL&FS...
Were they led to believe that?
I don't know, and I'm not in a position to give a judgment on that. But in the case of IL&FS, the government shareholders were not majority. Therefore, it was not a 51% government-owned company. And the government-led institutions were minority shareholders. And therefore, we have to then ask the question on the justification of the rationale.
Okay, that's as far as the rating agencies are concerned. But given what has happened in the system on account of the crisis of confidence post IL&FS, how much of that do you believe continues to be an overhang? And by when do you believe that we could see this logjam that you spoke of being broken?
Shereen, one of the issues which came out in ILFS and maybe concerning markets post ILFS is what I call as interconnected exposures. Therefore, an exposure given by, say, an NBFC to a group real estate company or a real estate company, or some arrangements which may be between two companies which may be not necessarily at arm's length,
right,
or lending or investment in very illiquid situation with short-term funding. Some of those issues are what may be concerning markets right now.
Are more accidents waiting to happen? Is that your indication, your assessment?
I will put it this way, that the current situation is fragile. However, I do not see a systemic problem if well handled.
When you say you don't expect a systemic problem if well handled, when handled on whose part?
I think certainly on the part of the policymakers and the regulators, but combined with responsible market behavior.
But what can the policymakers and the regulator do in this environment?
No, I think there are different ways of handling this. Number one, I do believe that with, for example, the inflation levels, CPI inflation levels yesterday, there is room for more reduction in short-term rates. That can certainly help the system. And I think it's important to keep the liquidity pretty comfortable in the system through this period.
Is it not comfortable? Because we just heard from the RBI at the...
No, I'm saying, I think what we got to ensure that it continues in the month of March, which is an advanced tax and a busy month. So we need to maintain good liquidity, ensure that interest rates reflect CPI, which is certainly soft.
How much of it is a liquidity issue versus a fear factor?
No, I think there is a fear factor. There's a fear factor. Back to the point I said, there is an element of fragility in the Indian financial system today.
And in order, again, of priority, what would you say what are the biggest concerns when we talk about this fear factor? Of course, one is, what has happened post IL&FS, the fact that there might be more accidents waiting to happen, and some of the other imbalances that you spoke of. But what is at the heart of this fear factor? What's causing the fear?
Shereen, it's a simple thing. The system needs to trust balance sheets. If you cannot trust balance sheets, there is a problem. And time has come for everybody to question that how trustworthy are Indian balance sheets. Until we get a good answer, good answer can come either from auditors or from the regulators. And without that trust, you will always have the fear factor.
So then, is there light at the end of the tunnel anytime soon?
So the system is making a difference. Wherever you trust balance sheets, the system is looking differently. Wherever you have concerns, the system is punishing disproportionately. Therefore, the price of uncertainty on the nature of the balance sheet is costing many companies.
So what will this then also mean as far as fund flows are concerned?
Fund flows are just
into
going
the Indian market.
Fund flows,
I mean, the flight to safety is what you've already spoken of.
And it's getting narrower, which is not necessarily a good thing from a long-term point of view. But I do believe that for us to be able to get the fund flow both from domestic and international investors is back to investors being minority investors to trust financials and true governance of companies in this country.
I want to address the NBFC issue systemically because there has been talk on a possibility of a review as far as the norms governing NBFCs are concerned. I don't know if any conversation has happened between you and the regulator or you and the government in the context of what we've seen happen with you supervising the IL&FS board. But what would the road ahead be, and is this the right time to do that?
we can discuss the timing, but just go back to a coincidence. 1997 was the Asian crisis. Indian NBFCs and the financial sector started having serious stress in 1998 all the way up to 2002, 2003. Similarly, we had the global financial crisis in 2008, and you saw the stress in the Indian system out of that in 2008. And exactly 10 years later, we are seeing some cracks which are coming into the system. So this is a 10-year syndrome, and we need to constantly move ahead, take corrective measures, because the system tends to get excesses, and that's what is happening. So 1998, 2008, 2018, 19.
You know, in the context of this 10-year cycle, we're also now at the one-year anniversary of the RBI 12th February circular. How have you assessed the developments post that, and where we stand today and where we could go from here on?
I am a believer in transparency, fundamentally, and let it be spoken. And true balance sheets need to be disclosed. If something is not true, we need to discuss and we need to see it transparently. The only issue about transparency is when you change a system or purge a system, there is, as I mentioned, significant frictional cost. So when you're moving towards a more transparent system, the only question you ask is, do you do it one shot or do you evolve into it? That is the matter of debate, not the end state, which is a transparent system. Therefore, should there be a period of evolution, or do you say one day this is the decision? Not the fact that we are in the right direction.
Speaking of direction, and you spoke of infrastructure and manufacturing as being bets that you would like to sort of focus on as we look at chasing growth in 2019. Outside of that, what are the other sectors that you believe, both in terms of valuations as well as the growth outlook, look interesting?
I think financial sector, as I mentioned, since it is in a fragile zone, would see significant consolidation. Now, consolidation, some of it will happen through mortality as well. Therefore, I believe we are going to see fewer players going into the future than what we have seen in the past. It reminds me of 1998. There used to be 4,000 NBFCs. 5 years later, we were down to, out of those 4,000, serious functioning ones, barely 100. So we saw significant transformation in the NBFC sector.
You expect that kind of a shakeout?
I think the shakeout is going to be pretty significant. I'm not saying the intensity will be as much as it was in 98, because prudential regulations have moved significantly since then. But consolidation in the financial sector, the time has come. And one of the things I would really like to see with the new government is a long-term structural solution to public sector banking in this country.
You know, this has been your pet theme, and you've spoken about this for so long, and we've seen absolutely no movement towards that. There was the idea of a holding company. There was the possibility of the government actually looking at bringing down its ownership. None of those things have actually transpired. What we are instead seeing is efforts to consolidate public sector banks and make a smaller public sector bank into an even larger conglomerate. Do you really still hold out the hope that we are going to see any significant change here?
I think we reach a point when necessity makes us take the right calls. And I'm not, as I've mentioned earlier, I'm not necessarily saying sell it to private sector, but make it broad-based. Why do we need to have government ownership of more than 50%? Why can't government ownership be 26% and the rest be widely held public? And in the short run, if there is a concern of potential fear factor in depositors' minds, the government can give some comfort on guarantees for a period of time till the confidence is established. So systemic move to dilution of shareholding in public sector banks with a transition to give comfort to depositors could be a way forward.
Has this been a disappointment for you, the fact that we haven't moved on this front at all?
More than disappointment, I believe that the lending capacity in the system would have been better if some of these decisions had happened over the last 10 years.
You know, speaking of ownership, and I know that the matter is sub judice, so I won't press you to give us details. But we've had this conversation in the past, and you do believe that the better thing for ownership when it comes to banks is that the promoter should have skin in the game, and you believe that regulations that disallow that perhaps are to the detriment of the banking sector.
Shereen, you're talking a language I've talked for a long time.
I said that. I said this is basis our conversation.
It would, however, at this point of time, considering that the matter is sub judice on matters of law, it's better I don't speak about it.
Well, you have to wait till March, which is when the next hearing is, to get some indication of where this is headed. But if it were not to go your way, what then?
I don't want to speculate.
No, I'm not. I'm just saying that if it were not to go your way, what then? Do you have the plan B already in place that you will set in motion then?
At this point of time, the matter is sub judice. I would not like to comment.
But do you have a plan B that you will set in motion if that were to be the eventuality?
Shereen, let's see how things develop.
Okay, fine. I won't press you further on that. But as far as your own NBFCs are concerned, given what we've just discussed as far as the current environment, what is the outlook and what is the future for those and your aspirations there?
These are our current NBFCs are subsidiaries of the bank,
right?
And we are in a very comfortable position. So overall, when I look at the bank and all our subsidiary businesses, we actually feel very good that we are in good health. We have been prudent. We have handled our balance sheet with care. And we actually feel this is a good time for us to be growing well and growing faster.
So what's the outlook as far as lending growth is concerned?
We have guided and we continue to guide at 20% plus growth in lending.